Hello everybody, it's Nicholas here and welcome to the second video of my YouTube channel. Thank you for joining me. This is a great video. Today we're going to be talking about the hidden patterns within Forex. And straight off the bat, I want everybody to understand that many strategies out there work. Okay? Support resistance works. Break and retest trading works. Trend lines work. Channels work. Patterns work. Supply and demand works. Many other strategies that are to do with indicators work. Now, I'm a smart money concept trader, but what does this mean? I think over the last year or two, this has been heavily diluted, what the actual meaning of smart money concepts are. And the main aim of this channel is for you all to understand well and truly what smart money is. And simply put, it is having an understanding of why the market does what it does, when it does, and then using certain patterns. And don't let any SMC trader tell you that they're not really patterns, because they are. Using certain patterns to take advantage of your knowledge. And you'll be surprised to find out that in many areas of support resistance, trend lines, supply and demand, patterns, and channels, you will get a smart money entry. And just because you are a smart money trader, it doesn't mean that you're going to be profitable. I mean, the stats are the same, and they have been for many years. 95% of traders lose, even though there's been a huge increase in the amount of people trading SMC. So, without further ado, let's get into today's lesson and have a look at those hidden patterns. And I hope it's going to open your eyes a bit so that you can understand that, wow, all these strategies that I keep bashing, they actually work, and they work in the same places. And in fact, usually the ones that I lose as an SMC trader are because they're not in line with trend lines, channels, support resistance, etc. So let's jump straight into the charts. Okay, everybody, now that we're on TradingView, I'm just going to very quickly, before we get started, just give you a little rundown of my charts and how it's set up. So what you can see here is these three different colors. This is essentially the only indicator that I use. If you have a look on the top left, this is the sessions indicator. Just type in into the indicators search bar sessions and you'll see it there. And what this does is it allows me to visually see what session we're in without having to look at the time. And this just makes it easier for me to trade. So purple is the Asian session, green is the London session, this sort of dark pinky color is the London-New York crossover, and then the pink on its own is New York on its own. Of course, during London and the London-New York crossover, we also have the European markets open as well. Okay, so there's a lot of volatility in the market between the London open and the London close. Okay, a lot of volatility because we've got three different sessions in play at the same time. Now, what we're going to have a quick look is, firstly, I'm going to talk about some support resistance. Okay, and you may turn off here, but don't turn off, because it's actually very important that you understand how support resistance works for you to be a good smart money concept trader. And this may be the first time you're hearing this. However, if we are looking to enter a trade after manipulation has occurred, where will a lot of manipulation occur? In support resistance areas, in trend line areas, in channels, in patterns. These are key areas where manipulation will occur. Now, many traders will increase their stop losses to take into account that manipulation that they also are aware is going to happen. So don't just think that smart money concept traders know that manipulation exists in the market. 90% of traders know that manipulation is a big aspect of the market, and their strategy tells them to have a bigger stop loss, a 50 pip stop loss, etc., to ensure that they can survive any normal manipulation. Okay, now what this does is, of course, lowers their risk to reward, but as long as they are good at identifying these areas, will increase their win rate. Okay, now with SMC, we are looking to identify these areas so that we know where the manipulation is going to take place and then enter after the manipulation has happened. This allows us to have a slightly smaller stop loss. Now, I'm not an advocate of having a 1, 2, 3 pip stop loss. I was in my early days of learning to trade. But what I realized by doing that, and we'll talk about that more in another video, is that I would take many, many trades and lose many and then get one winner. And most of the time, that one winner will take me back to just about break even. And this was not the way I wanted to spend my life trading. So let's have a look here and identify some support. Now, the good thing is you don't need to be perfect with this as an SMC trader, but you need to have basic understanding. So let's draw up, we're on the 4 hour here. Let's just jump down to the 1 hour. And just so we can get a little bit more data. And let's draw some areas that are going to act as support or resistance. Okay, so we've got this area here. I'm just going to zoom in a bit, not too much because I do want you to see. So we've got here, we've pushed up, we've come back down, we've tested it, we've pushed up again, come back down, tested it, pushed up again, come back down. This time we went through it and we retested it here, went further down, came back up and broke through, came back down, retested it, pushed up, down, retested it. So you can see that this area right here is definitely acting as some sort of a support and resistance area, okay, on both ways, on the buys and the sells. Now, as we move along further, we have this, we test this support, we push up, and we head to the upside. Again, we come back down, we test it, we push up. Here, we can see we played around a little bit before breaking, push back up to test it, come back down. Again, here, 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 and so on and so forth. So you can see this is quite a key area for us to look at where perhaps manipulation can take place. And one thing you need to understand about smart money concepts is they are not a trading strategy. Okay, SMC is not a strategy. SMC is a way of thinking, is a set of theories that tell you that there's big players in the market that will manipulate the market, but also, and this is my preferred opinion on the market, is not necessarily the big players that are manipulating, but it's the algorithm of the market itself. It's the way the market is programmed. And for those of you who think, what are you talking about? What algorithm in the market? Well, let's be honest. This is a computer program. What we see on the charts is a computer program. Yeah. This data comes from an exchange, which provides the data in the form of these charts. A computer program. Now, the big moves that occur are, of course, occurring due to economics, due to the big players entering at certain times, and we use certain patterns, certain entry methods to enter based on what we see, no matter what strategy you trade. Now, this smaller intricacies that we see are what I refer to as the algorithm. And you may see this on ICT, you may see this on other SMC traders. It doesn't matter. I'm not here to reinvent the wheel. I'm just here to hopefully clarify things for everybody. Now, what we can see here is, and this I think is really important. Let's just go into replay mode here. And this is a really good area here. Now, of course, we've seen what happened already. Yes, this is after the fact. We need to learn. After it's happened, you go back, you look. Then you start to implement these things. So what we have here is a clear reaction on this support resistance line. Yep. We get the manipulation to the upside, then we break down. Many SMC traders who trade on the hourly will be looking to enter a sell here when price comes back. Okay, in the hope that they will get an entry and it will take them down to a TP somewhere in this region. Okay, this is what general SMC teaches you. Okay, now what we must understand is that the market is now adapting. There's so many SMC traders that this area that may have held a year ago, 2 years ago, is now actually being manipulated. So these obvious areas are often being manipulated now. Okay? And you might think, well, how am I meant to trade if even the areas that I do the butter are also being manipulated? And this is the key part here. You must understand, as I've already said, that smart money concepts are not a trading strategy. Smart money concepts are exactly that. Concepts, theories about how the market works. And what you must understand now is that if I am an SMC trader, I must understand now that if so many other traders are also trading that style of trading, that now this will be manipulated. Because at the end of the day, for somebody to sell, so if I wanted to sell gold here, somebody must be there to buy from me. Yeah, makes sense? Because for me to sell, somebody has to buy. Economics 101. If I want to buy, somebody must sell. Just like if you go to the shops and you want to buy an item, somebody has to sell that to you. It's the same thing in the Forex markets. Okay? And you all need to understand that there is essentially an order book that you can that is determining whether your entry gets filled. If nobody wants to sell to you at this price, you can't buy. If nobody wants to buy from you at this price, you can't sell. Okay? Now, what's happening is that you're seeing these areas get manipulated. Okay? Again, look, another SMC entry here. Yeah? Or concepts, honestly. Order blocks, institutional candles, whatever you want to say. 1 hour institutional candle. I like to call them the last up because technically it's exactly what it is. It's the last green candle before we broke structure to the downside. Yeah. Now, many traders again will be looking to enter here for a sell down. These will be SMC, supply and demand traders looking to enter here. Okay, because this has been highlighted as that institutional candle. This is the candle that broke structure to the downside. The importance here is that it's in an irrelevant place. Why should this hold? Why should it hold? Just because it's green? No. It's in the middle of a random leg down. Why should it hold? Yeah? Why? You're much better off identifying these big swing areas right there and waiting to see if price sells off when you get there. Okay? Not in random places already very low down on a leg. Because we pushed up. Let me just zoom out a little bit. We've pushed up, we've retraced down, we've pushed back up. Yeah? And yes, we've got imbalances in play, we've got lots of things in play here. But look at what I want to highlight to you as well. And we'll get more specific as we go through my YouTube channel. Each lesson will be more and more specific. But here, what do we have? We have an imbalance. For those of you who don't know what an imbalance is, essentially it is caused by very aggressive buying or selling. So what that means is we've pushed up very aggressively and the market is trading out of balance. How do we know? We haven't got a crossover in the wicks, okay, of the candles. Again, that's for another lesson. This is more generic. So we've got an imbalance where we react. Okay, important. We've got an imbalance where we react. But what else do we have? And a lot of SMC traders won't want to admit this. Watch this. What do we have? What do we have? We have an area of resistance, pushed away, came back, now confirmed, pushed away. On the third tap, a lot of people will be expecting to sell off. What happens? They get taken out. Yeah? This is why this imbalance has to be created, because we have to break through this with force. They get taken out. The sellers get taken out. Imbalance is left. We come back to that imbalance to fill, to rebalance the market. But where do we react? An area of support, resistance, now comes support, in line with an imbalance, which is SMC tie there. So what I want everybody to start to look at, and I'm not going to go for too much longer, what I want everybody to start to understand is that the secret patterns to the market, we have had them for generations. We've had them for decades. The areas that work best on SMC are areas that correlate with other trading strategies, with support resistance, with trend lines, with channels, with patterns. And when you can understand this, you then start to make that breakthrough. Now, I personally, as an SMC trader, I trade and teach very mechanical based entries. However, of course, with discretion in there, because you must have discretion on whether you should even consider that trade, even if it's presenting on a mechanical basis. How to manage that trade. Maybe you've got news coming out. Maybe you've failed to hit that TP 1, 2, 3 times. That's usually meaning that price is being exhausted. So maybe we should just take TP a bit earlier. So there's slight discretionary elements, but every strategy has that. Okay. And I hope this very quick, very to you how these areas that are standard retail trading entry strategies coincide very nicely and SMC entry off of imbalance and even a bit of liquidity being built, manipulated, and then broken above. Okay? And I've shown multiple examples here of how standard SMC in random places is irrelevant. However, pairing SMC with standard patterns, action, resistance that we have seen for decades upon decades is the secret pattern to becoming a successful trader. Okay, and as we go on, more detail on these elements. Thank you very, very much, everybody. I hope this gave you a little insight into how the market works. The next session is going to be even in more detail on how the market works and why it does what it does at certain areas. Thank you very much, and I'll see you in the next video. Bye-bye.